Hello, everyone. Good morning to those of you in Canada and good afternoon to those of you in Europe. Welcome to our fourth webinar of a series of 5 webinars by the CETA Market Access Program for EU Business, with today's topic being the CETA's Rules of Origin. Before I introduce you to our presenters today, I want to briefly talk about CETA, short for the EU-Canada Comprehensive Economic and Trade Agreement. For EU businesses, it has importantly eliminated tariffs on 98% of European exports to Canada, and it has made administrative procedures easier with lots of red tape being cut. It has brought numerous benefits for easier labor mobility across borders, an improved investment environment, standards cooperation, and better intellectual property protection for your business in Canada, and much more. In fact, between 2017 and 2019, EU goods exports to Canada rose from 32.2 to 38.3 billion euros per year, amounting to a near 20% increase following CETA's provisional application. I'd like to also refer you to our previous webinars, the first one being how to export to Canada and benefit from CETA, the second one, how to find a business partner in Canada, and finally the third one, immigration and mobility of professionals. They provide a step-by-step guide on how you can benefit from CETA and what you need to do to expand into the Canadian market. You'll be able to find these videos on the YouTube channel of the Delegation of the European Union to Canada. Finally, I would like to briefly talk about the CETA Market Access Program. We are funded and supported by the European Union. What we do is we assist European businesses and particularly SMEs to take full advantage of the CETA agreement. We help EU SMEs gain comprehensive sector-specific information about the new opportunities CETA brings in terms of removing market access barriers in Canada. We provide guidance to businesses on how to benefit from CETA while addressing challenges in their business strategies. We create sustainable channels of communication between EU businesses in or seeking to enter Canada and institutional stakeholders. Now, I would like to introduce you to our presenters. Today, we are joined by Frederick Beckvid-Trankel and Gary Wilkinson from the European Commission. In the first half of the webinar, Mr. Trankel will speak to us about CETA's Rules of Origin and then demonstrate the Access to Markets ROSA tool, short for the Rules of Origin Self-Assessment. In the second half of our webinar, Mr. Wilkinson, together with Mr. Trankel, will answer your questions during the Q&A session. So make sure to submit your questions under the Questions tab. With this being said, I now leave the stage to Frederick Beckvid-Trankel.
As you might know, every trade agreement requires rules of origin that are there to ensure that the benefits afforded by the trade agreement accrues to companies in either of the two parties to that agreement. So, for example, CETA should in principle only apply to European companies making products in Europe and Canadian companies or other whichever company who makes products in Canada. This is to ensure, for example, that you don't take a Chinese fridge and attach the door and then call it a European or a Canadian fridge and benefit from preferences. So they define a minimal level of processing that you need in order to get, you can call it economic nationality for your product. This is a necessary part of each trade agreement, but it brings about a few issues for businesses who want to benefit from it. Namely, you need to understand the rules of origin that are applicable to your products, along with other relevant provisions, and you also need to document that origin. For example, be an origin declaration to your customer so that they can claim the tariff preference. The benefits of doing so can be very large. If the most favored nations tariffs apply, you can basically reduce that to a zero instead of paying whatever the tariff rate is. So in many cases, it makes sense for companies to dig into rules of origin and use those to benefit from preference in the agreement. In order to simplify the process of assessing whether your product is originating and guiding you through how to document that origin, the Commission has developed a tool which is called the Rules of Origin Self-Assessment Tool, or ROSA, from here on out. It is a part of the ambitious new Access to Markets portal of the European Commission, which helps businesses in Europe who want to export, but also businesses outside of Europe who would like to export to Europe, to find out in one place all the relevant rules and regulation and tariff rates, etc., that they may be subject to doing such transactions. So, and this tool is quite innovative. It's interactive. You basically are guided through the whole process, each step of it, how to assess the origin and how to document the origin, and it gives you only the information that is relevant to your product and your production process. So I will now leave the PowerPoint presentation and we'll go into the Access to Markets portal, and you will find the link here in the PowerPoint presentation that will be shared after the event, or you can just Google or use another search engine to just search for Access to Markets. Now you should see on your screen the landing page of the Access to Markets portal. So let's take an example where we are a German company looking to export boat engines to Canada. So in that case, you might know, for example, the HS code of your product, but it's also possible to search for a name of a product and see within the nomenclature what where it would be classified. I mean, this is so here we have inboard engines, which is what I was searching for, and the ones which are not diesel but are by petrol. So here you will see that there's a 6% tariff applied by Canada under WTO rules, most favored nation rate, whereas there's an EU preferential rate of 0%. So I will benefit from a preference of 6% if I can demonstrate the origin of my product, so it can be a worthwhile process to go through. To find out, you go to ROSA, you click Rules of Origin ROSA in the side tab, and here you will get start with some general information. For example, informing you that if there is not a tariff, there is no need to fulfill rules of origin. If there's not an MFN duty, if all countries are treated the same, then there is no point. But if there is a preference margin, let's say, so if it's, as in our case, it's 6% or 0%, then you need to fulfill the rules of origin in order to qualify for that market. So the way the rules of origin work for industrial products is that you have product-specific rules, and that is the most normal avenue to achieving origin for any industrial products. And this is where the assessment starts, where you can see that there are two alternative product-specific rules here. We also have other alternatives where the product can be exclusively produced from originating material. So this is if you know that every single screw or bolt you use in your engine, you have information that they are originating already, then you don't need to look at the PSRs. But this is not a very common way to get origin when we're talking about complex industrial products. The same, you have an option with wholly obtained, which is something that also has been fully produced in the territory, but this mainly is relevant when we're talking about agri-fish or some minerals, for example, where you know that they were basically taken from the ground or a field or the ocean of your country. So let's look at PSRs because they are the most relevant. And here we see we have two, and it can look a little bit daunting. We see that we have one PCR that says a change from any other heading, and then we have one that says a change from within any of these headings, whether or not there's also a change, blah, blah, blah. You can read, provided that there is a 50% value added. So it's a little bit complex to just see the rules. And if you open the trade agreement, this is the way it looks. So we have introduced a possibility to get a thorough explanation. So if we would look at this rule, change from any other heading, we can click continue reading, and we will get a thorough explanation here of what does it mean. So for example, we can see that all of the non-originating materials I use must be classified in a different HS heading, so in the harmonized system, than the product. So I need to look at my materials and see where they are classified. And if I import any materials, I will need to check that they are not in the same tariff heading as the product itself. For example, in the case of engines, normally all parts are classified in another heading. So in this case, it will be quite easy. We also have an example here explaining a little bit how you could think about this type of rule. So, and information about how you should, that you are allowed to disregard the origin of certain factors of production, such as fuel or tools. Only what you put in your actual engine is relevant for assessing the origin. You can disregard the packing materials, etc. So if we go back and close this window, we can then pick that we have fulfilled this rule after, of course, doing, of course, there is legwork to be done to collect the documentation that indeed your engine is made from is not made from any non-originating materials within the same HS heading. And we can go to additional requirements. And here we are, you have some horizontal requirements that, in addition to the PSR, you need to fulfill. The first one is called the Territoriality Principle. It's quite simple. You need to, your production needs to take place in the territory of the EU or of Canada. You cannot do some production in Germany, then send your engine to Morocco, and then take it back to Germany and get origin. Only what you have done in your territory will count. So again, if you click here, you will get a thorough explanation of how does this principle work with examples. You also have references here to the relevant legal text. So it can also be used as an index to access instead of navigating through a long trade agreement to find the relevant provisions. You can always click here, and it takes you directly to Article 2, which was the reference here, where you can see that here's the territoriality principle, that the conditions set out in this protocol relating to the acquisition of originating status must be fulfilled without interruption in the territory of one or both of the parties. So for each of these concepts, there's always further explanation and direct links to the legal text that regulates that. So let's say we fulfill the territoriality principle. We have something called minimal operations, which defines some minimal processing that you need to go beyond in order to get origin. It's basically a way to avoid circumvention. If we go to the article here, we can see that operations such as washing or cleaning or simple painting or polishing operations, etc., they are not enough to get origin, even if you fulfill the product-specific rule. Normally, if you fulfill the product-specific rule, in 99.9% of the cases, you have gone beyond this. For example, it would not be possible if you import an engine and then just paint it. It would not. You wouldn't have fulfilled the product-specific rule in any case. So normally this is quite simple to fulfill. So let's say that we have indeed gone beyond these minimal operations here. I can click yes. Here we add another provision, which is that you need to keep track by physically separating non-originating and originating materials when you store them. And there is a possibility when you have fungible materials, that might be sugar or some chemicals, etc., that you can use a system of accounting segregation. This is relevant for a limited number of sectors. In the case of my engine, I have a thorough tracking system of parts anyways, and they are not really fungible, my materials, so I keep track of what I have imported and what is originating. So let's say that it's not applicable in my case. We also have information about the duty drawback. Basically means that since September 2020, 3 years after the entry into force of CETA, I cannot get duty relief using an inward processing scheme on my products when I re-export them under preference to Canada. So here is just a bit of a point of information about that. Then we come to the next section, which is the documentation requirements. So here it's quite clearly stated you have to make an origin declaration to certify or to indicate the origin of your product. And we see that for consignments of less than 6,000 euros, any exporter can issue such a declaration. Whereas if it's above 6,000 euros, I need to be registered in the registered exporter system. So, for example, I might wonder what does this mean, the registered exporter system? Again, I can always click to get information about this. And normally it's a very easy registration process made by the member state, by the customs authorities of your member state. If you are an exporter in Canada, there might be other requirements. So therefore, you always need to check there what is the most recent in terms of what kind of business number you might indicate on the origin declaration. But now we are an EU exporter, and let's say we export above 6,000. It would make quite a lot of sense for engines. I can just check this alternative here. Again, if I want to know more about the actual origin declaration, I have it here. I can even access the annex where it's set out, and I can see exactly the type of text I need to put on my invoice or another commercial document with the origin declaration. Now that I have answered this question, we come to the last part of the interactive part of ROSA, which is about transport conditions. So it's a little bit parallel to the territoriality provisions that you cannot process, you cannot take your product from Germany and send it to USA and then do some operations there beyond very limited operations before you re-export to Canada. So what you can do in a third country hub might be some things such as you can click here and we'll find out a bit more. You see that we are allowed to, for example, store products, split consignments. We can, any operation to preserve the goods in good condition. So I might, add some oil on my engine to prevent it from rusting while it's storage and things like this. I might add documentation about the product. For example, this can be quite useful if you are exporting via hub to send products to several countries in North America. You might put a bilingual French-English instruction manual for the Canadian market, a Spanish one for the Mexican market, and an English one for the US market. And this might be more efficient to do that in your hub as you get the orders while you store the products in your hub in the US, for example. So this you're allowed to do, but you're not allowed to do any real production steps. And again, here you have the reference to the legal text, so you can read exactly how it's drafted in the legal provisions about transport through a third country, Article 14. In many cases, you might not yourself be responsible for your product. You might sell your product ex works or FOB, and you don't know. It will be the customer or a middleman who transports the product. In that case, you can click not applicable, and that way it will be up to the importer to make sure that that he fulfills the transport condition. Now that we have filled out our assessment, we get the result, which basically tells you that based on what you've answered, the product is originating in the EU or Canada. That you need to make out the proper documentation and be registered in REX. And in this case, well, I'm not responsible for the for the transport of my product, so it's not really up to me, but it's just I can inform my importer that indeed there can be no processing in a third country. I'm able to print the self-assessment, which will give me a PDF that I could open. I think my computer is slow, so it will take some time for it to open, but it's basically just all of this information that you get as a PDF that you're able to save in your files relating to this order, or even print and keep in paper files if you like. This is of course not a legally binding determination of origin. It's a good guide to make sure that you have followed all the relevant steps to get origin. Then we get to a more static part of the ROSA tool, where we talk about what happens after the product has been exported. And here I would like to invite Gary Wilkinson from the Directorate General in the Commission for Taxation and Customs, who is an expert on origin procedures. He will just give you a quick run through of what happens after the export.
Okay, thank you very much, Fred, for taking everyone through the step-by-step guide through ROSA, the Rules of Origin Self-Assessment Tool. It does look a little daunting. There's quite a few things to take on board, obviously, with Rules of Origin, but it's a very good application. I'd encourage you to use it and go through it. And if you've got any questions, let Fred or myself or someone from the Commission know. So obviously going through the tool is not giving you preference per se. The importer is going to have to make an import declaration when you export products that are originating and make a claim for preference. Now, in making that import declaration, the importer is going to have to state that he holds the proof of origin. So he knows that the goods that are being imported are originating in the other country. So if it's a Canadian importer, he knows that the company in the EU exporting those products is sending originating products. And the exporter will provide that information to the importer, in this case in Canada, through making out what is called an origin declaration. And Fred showed you the text of that before. So it's a simple one-line declaration, and that will go on your commercial document like an invoice. So your invoice will detail the products that you're exporting, that you're selling from the EU, for instance, to Canada. You make a declaration on that invoice saying that these products originate in for instance, the EU. And if the supply, the consignment is above 6,000 euros, then you will give your REX number in the EU. The REX number is just a simple registration that is done in with your own local customs authorities. So you fill out, you can do this online with your customs authorities, a simple form, there are 6 questions, basic information about your name, your address, whether you're producing the goods or just exporting them. Within the space of a few days, you should get a REX number, and then you put that REX number on the invoice. So you will say that these goods that you're exporting, and then you quote your REX number, are of EU originating origin. The importer can then take that invoice, and with that information can make an import declaration claiming preference, hopefully tariff-free or at least a reduced rate for those products coming in. For the EU side, it's a REX number. Fred touched upon it. There's a different system in Canada. If you're an exporter in Canada, then you use what is called the business number. The business number is the number that the Canadian authorities, whichever authority that is, uses to interact with you as a business. So you should already have, in the case of Canada, a number that you can use. So it's reasonably straightforward. Once you have knowledge that your product is originating, as I say, you make out a simple declaration, origin declaration, on a commercial document. It doesn't have to be the invoice. It can be a packing list, a delivery note, but it must be something that details the products that you're exporting in sufficient detail for those to be identified. And then once the importer is in receipt of that document, he can make his import declaration and claim preference. Now, it can be the case that the customs authority, which is on the screen, point 5, might want to check that this is actually the case. So they will do a verification to ascertain whether those products are originating or not. So if the products are imported into Canada and the Canadian authorities have some doubt about the origin of those products, what they will do is, from the information they have from the import declaration, they will send a request to the customs authorities in the EU. And that will be the customs authorities for where the business is established, from where the export has taken place. So in this example, I think Fred had picked Germany. So German customs would get a notification from CBSA, the Canadian Border Services Authority Agency, I forget exactly. And on that request, German customs will contact the exporter in Germany, and they will probably do a visit. They will get in touch with the company, and they'll go down and they'll look through the books and records, and they will ascertain whether the products are originating. The EU will have 10 months to reply, so it's a reasonable, no, sorry, in the case of Canada, it's 12 months. You have 12 months for the customs authority to reply. So you will not get any questions from customs authorities in the other country. You will only have a deal with your own local customs authority in answering any questions about the origin of your products. So if you're making out that statement and it needs to be checked, it is only your local customs authority will get in touch with you and ask you any questions in relation to proving the origin of those products. You can as well, because it can be a little bit tricky knowing whether the products actually are originating or not. And as is indicated on the screen under point 6, you can ask for a binding origin information. So you go to your local customs and you can ask them, can they give you a ruling that these products are originating? Now you'll have to provide them with all the information, and you will have to say that the products that you will be exporting follow the same manufacturing process and the same conditions. So there's a uniformity in terms of how you're making those products and therefore the originating status of those products that you're exporting. They're not used so often, I must admit, the binding origin information. I think it works better, I must admit this, on the Canadian side. I think the Canadians are very much more geared up to providing binding origin information. So as I understand it, the EU exporter can get in touch with CBSA, the Canadian authorities, and ask for a ruling. Of course, they need to provide documents and information to substantiate what they're saying is originating in the EU. But then the Canadian authorities will give them a binding ruling. And once you have that binding ruling, provided that the goods are made in the same way, you follow the same procedures, then you can be guaranteed that those products that you're sending to your importer in Canada will be originating. And if there was any doubt on the Canadian side, you will have a document of binding origin information that will indicate that you've gone to the authorities in Canada and they've given you this attestation, if you like, this document saying that your products are originating. So it can be useful, especially when the products are a little bit complicated in the manufacturing process and there is some doubt about whether they are originating. We do it as well on the EU side, so Canadian exporters can get in touch with customs in the EU, and that can be useful for the Canadian side. But as I say, I think, although I have no experience, I'm not a trader myself exporting products, but as I understand it, the system in Canada is very well developed, and as far as I know, that they're very happy, or would encourage people to get binding origin information. I think that covers the points I was going to make. I know Fred has just scrolled down a little bit. I'll let Fred go through the last points.
Yes, thank you very much, Gary. And here you will see, just in the end, you have the relevant legal text and guidance documents easily accessible. So Gary and his colleagues have done thorough work on all of the implementation aspects and questions. So you will be able to get them addressed in some of these guidance documents as well. So it's really an effort to keep all the relevant information in one place and to make it interactive. And I think at this point, I think it would be wise to open up for questions. There is another function where you're able to compare the rules of origin, the product-specific rule of origin for your product, and for example, the agreement in EU trade agreements with other countries. So you can, for example, check if it's similar in Japan for EU Japan, or if you want to export to Egypt or wherever, which will also simplify your assessment. So that you can do by clicking this link. But I will let you try that for yourself, because I think there will be plenty of questions. So I will leave it there. If an EU clothing company makes tops to a client in Canada from South Korean fabric, what is the advantage for the Canadian client to send them the Annex 3 of CETA? So as you know, normally making clothes from foreign fabrics is not enough to obtain origin. However, there are origin quotas in the EU-Canada agreement for textile products, which means that for a limited amount per year, limited quantity per year, but they are not fully utilized. So it's absolutely possible to, even if you have made clothes with foreign fabric, you can still benefit from the preference. So the benefit for the client, if you fulfill the rules of origin and send an origin declaration, is that they can save on the tariff cost. So this can help you gain a competitive advantage, or in economic terms, you save your client money, so there will be a possibility to profit from that yourself, either through building a better relationship or charging a higher price. Yeah. And then we have a question here on where can I learn the product code of the product, the relevant. I will leave this for Gary, but when I do research, I find that Google is a very good friend when it comes to finding out the relevant HS codes. But I will leave that question for Gary, who will tell you a bit more formally what you can do to find out the HS code of your product.
Yeah, there is 97 chapters to go through, so it could be a bit tricky to know exactly what your product is. If you have doubts, you can approach customs. Customs will give you some advice on how to classify your product. If there is some doubt about it and you want, in the same way that you can get a ruling on the origin, you get a ruling on the classification of your products, you can provide the information to customs and they will give you a ruling on the classification of those products. And that can be done at different levels. It can be done locally. So if you're in Germany or Belgium, you go to your customs and you get a ruling in Germany and in Belgium, but you can also apply for a ruling at EU level. So for those products to be exported from anywhere in the EU, you can get a binding classification for your products. So if you have any doubt, approach customs and customs will take a look. And if you really want to, you can get a binding ruling in the same way that you can for the origin. You can get a ruling on the classification.
Yep. Thank you, Gary. And we have another question here about how to proceed if you are supplying complex equipment consisting of many different parts coming from many different places. So normally we have here examples for turbines, hydraulic pressure units, generators, etc. So normally in the cases for most machinery products, there is a rule which is this change of heading rule, which basically means that you have a carte blanche to import anything that is not in the heading of your product. So a lot of these parts will not be classified together with the products, and them you can import freely. You also have the other route, which is normally a value-added type rule, which is available in CETA and other agreements. But in CETA, it's actually a bit more flexible than in many other places, where you basically have an allowance for many industrial products to import 50% in terms of value in the same heading as your product. So anything that comes from outside, along with 50% within the same heading. So this can be quite useful if you pursue, and this will tie into the next question as well about supply declaration. If you apply, for example, the value-added rule in many trade agreements, including CETA, the value-added rule is around 50% for industrial products. Then, if you sell your products for 1,000 euros, then you know that you are free to import 500 euros worth of parts. So for them, you don't need anything. But then if you, for example, if you have a bill of materials for your product for 100 euros, your product costs 100 euros and you have a bill of materials of, let's say, 70 euros, then you only need to find 20 euros worth of materials that are originating. And then where the rest comes from, if it's 50%, you don't need the supply declaration for every single product that you, every single part that you use. You just need enough so that you meet the threshold. And normally, since you add quite a bit of value yourself in your production, a threshold of 50% is quite easy to meet for complex products. So you would start by looking at the highest. The way I would do it is I would look at the highest value parts that I buy from European producers and get the supply declaration for those, and then I would quite easily reach the threshold of being sure that more than 50% of value is added in Europe or Canada. You can also, of course, use Canadian parts. We have this question about supplier declaration, which I will leave. Yes. Is there information about suppliers declaration on the portal? Indeed, there is. I think I will demonstrate this. You have information here in section 2. What happens with if you are a supplier to another EU company? You can issue suppliers declarations to your customer so that they in turn can export. And clicking here, you will get more information, including a thorough guidance documents on how to use suppliers declarations within the European Union. Gary, anything you would like to add on suppliers declarations and how they work?
No, just from what you said, you can use this tool for the origin of your products, not only for those products that you're exporting, but those that you're sending internally within the EU. It will be an EU originating origin that someone is going to use to make a product to export. And unlike when you export, you use an origin declaration on the invoice. In the same way, within the EU, you can make a declaration on your invoice, supplier's declaration. More commonly, rather than doing a declaration each time you supply products within the EU, you can make out a long-term supplier's declaration. So you can say, for the year 2021, all the leather that I send to my business, to my supplier in the EU, will be originating. So you don't have to, on each invoice, make a declaration saying that each item of leather that you're selling is originating. You make a declaration for the entire year, and that's quite common. And in the car industry especially, they rely on a lot of suppliers' declarations for the various parts that go into making a car. And you can also as well do it retrospectively as well. So if you come to today's date, the 8th of February, you can issue a supplier's declaration that would still cover 2021, so it will cover the period from January, but as well going forward. So it's a quite flexible, useful document that we have within the EU to show that the materials that you're sending on to another company are originating.
Thank you, Gary. Question: what happens if I source parts sometimes from Bolivia, sometimes from Argentina, and sometimes from Ethiopia? Do I need to track where the product is originating from? The answer is no. When you export to Canada, the only thing you need to know is whether the part comes from EU or Canada, so you can count it as originating, or if it comes from outside. If it comes from outside, regardless of which country it comes from, it has the same effect. So you don't need to keep track of that. You just need to count the cost of that part as part of your non-originating materials. I hope that answers that question. We have an issue. Someone wants to clarify the issue of transportation. You use a American distributor or warehouse, can you benefit from customs duty preference when exporting to CETA? Yes, but there is a caveat. It has to stay under customs supervision. So if it's a for example, a bonded warehouse or something where it's not declared for import into the US, but it rather sits in a warehouse in a free port or in a bonded warehouse or something like that, then you can indeed sell it on to Canada and using the preference, provided that you do not do any processing going beyond what I mentioned before when it came to splitting consignments or adding labels or instruction manuals, etc. How about if you export software applications? You need the same document. No, I think most software applications now are not traded as physical disks anymore, and there is a moratorium for customs duties on digital services. So there are no customs duties for software. So you don't need to make any documents to avoid customs duties. If, for example, you sell, let's say you sell a product with, let's say, advanced industrial machine that contains has pre-installed on it some sort of software, then of course, if that software would be part of the value of the customs value of the product, if I'm not mistaken, Gary, and you could, that would at least be a part of the value you have added in Europe. But normally, if you just export the software as the digital way of delivery, and there's no goods crossing anywhere, then you don't need to do import declarations in this way. Then you are selling a service rather. We have a question for you, Gary. Who checks whether the HS number I used is the correct one?
Customs will check it. So if you send something to Canada, the Canadian importer will put a HS code on that. The Canadian customs authorities will check that that code is correct. In most cases, there shouldn't be a problem. You'll indicate to your importer what the classification of the goods are, and the importer will be using that code to make the claim for preference. So it should be the same. If Canadian authorities have any doubt about it, then as I said before, they can raise a verification request to the exporter in the EU via the EU customs authorities. But no, you will normally in your standard documentation indicate the shipping documents, the classification of the goods, and that'll be what the importer uses.
Thank you, Gary. We have another one here as well on if a product is produced by a Canadian company and then a Canadian distributor, so a company other than the producer exports it to Europe, who needs to do what when it comes to the origin declaration?
So the declaration is made by the exporter. So the exporter will use his business number, in the case of Canada, to make out the declaration on the invoice that is going from the Canadian company to the importer in the EU. As we mentioned on the EU side, the relationship between the exporter and the one producing the products, the proof between those two parties comes through a supplier's declaration. And as far as I know, Canada have a similar system by which suppliers will inform exporters that the products are originating.
Our company makes telemetry transmitter devices. Electronic components are made by American companies, and most of them produced in China. Our circuit board is made in the EU, except the antenna. Embedded software also made in the EU. Is the product considered originating in the EU? You will have to think about, in this case, you will have to think about a few things. So the first is the product exported from the EU? So is it finally assembled in the EU and then sent on to Canada? Yes, then you have the possibility to fulfill the product specific rule. You have to check what the product specific rule for your telemetry transmitter device would be, and then if you kind of finalize the product in the EU, maybe it's a 50% value rule, and you find that okay, we sell our product for €1,000 and we import the devices coming from China and the US is 400. Then of course you meet the rule, and you can count the embedded software as part of the price. And if, for example, you make the circuit board in the EU, but then it is sent together with the American components to China, where it's assembled together with Chinese components and then sent directly from China to Canada. In that case, no, because then you have done more processing in a third country, i.e. the assembly of the final product, than would be allowed by the agreement, and it would have left customs supervision in China. So then it would be seen as an export transaction between China and Canada. But if you import all components and assemble the final product in Europe and then send it to Canada, then you will be able to benefit from preference, given that you do enough value added or other type of processing in Europe to meet the price rule.
I think they have to be careful that the production has to be uninterrupted in the EU. They can't be doing a bit in the EU, sending it somewhere, further process is done, and then those materials come back in, and then you do an assembly. The rules would require you to do the manufacturing process without interruption in the EU.
Yeah, and if the production is interrupted, it's only when it comes back to the EU, you start counting from zero again with whenever you have, if you do a sub-assembly in China, including European parts, then take it back, take that sub-assembly back, then that sub-assembly will no longer be the kind of European parts of that sub-assembly, since they have left Europe, can no longer be considered as European. So please, if you have more details, you can send them in writing to us, and we'll be happy to take a look at the specific case, given your production process and what the specific PSR would be. We have a question here of whether there's a difference in treatment of items if they are packaged for retail, or if they come from, or if they are sent in bulk. For origin purposes, there might be a slight difference depending on the product, because sometimes retail packaging will be considered. You have to take into account the value of the retail packaging, for example, for value rules. Can be relevant maybe for perfumes, where the retail packaging might be a very substantive part of the value of the final product. But normally that would be the only difference, that normally if you ship in bulk, you can disregard all types of packing materials. Whereas if it's retail packaging, you might, in some cases, depending on what type of product specific rule, and this is also listed in ROSA, you might sometimes have to take the value of that into account, and the origin of the retail packaging into account when assessing the origin of the product. So if my product goes through its final manufacturing process in the UK, should I now change the location of that final stage to an EU member state? If you want to benefit from EU trade agreements, yes. There might be opportunities within the UK Canada agreement to still achieve origin under that and export under that. But if you want to export under an EU free trade agreement, the final stage of production must take place in the EU. So that is the answer. And of course Brexit brings a bit of friction, and you need to recalculate the structure of your supply chains and production structure in Europe. When we know that this is an issue for many companies, but this has been the choice of the UK government to leave on these terms, where we have an FTA between us, and it means that you can no longer see the UK as EU territory when it comes to assessing origin and using EU free trade agreements.
Thank you to everyone who joined us today, and a great big thank you to Frederick and Gary for this wonderful presentation. And as you can see on your screen, you may follow the EU delegation to Canada on various social media platforms to access our previous webinars, learn more about upcoming events and reports, and receive general updates. This concludes our webinar. Thank you very much for joining us today, and we wish you a great rest of the day. Thank you.
Thank you very much.
Thank you. Bye-bye.